Hi, Jim Gore from THOR Wealth Management. In some of our most recent updates, we've been talking about the US dollar and its falling in value. And specifically, back in October of last year, we talked about the Big Mac index and showing that Big Macs are more expensive here in the United States than anywhere else around the world. And then we talked about January 14th in our market update, looking at the trend of the US dollar. The uptrend for the last 10 years has been broken, and we're starting to see a downtrend in that in the US dollar. Both of those, we provided links to those so you can go back and watch those for your reference. But what I want to talk to you today is about what happens to international and emerging market securities when the dollar is going up versus when the dollar is going down. So if you look at this chart, this is going back for a time period from 1974 to 2019. EM emerging markets, when the dollar is going up in value, their annualized rate of return is only 2.7%. However, when the dollar is going down, it's a 22.5% rate of return. And you can see all the way on the right versus the US stock market that is significantly higher than the US stock market. International did pretty well as well, but they were up 18.6% annually when the dollar is going down in value. So let's take it a step further. We talked about this trend being broken, but let's look at actual returns for the last 20 years, and let's look at different decades. So let's take the first decade, which is looking at 2000 to 2010. This is when the dollar was going down in value. This is at the end of this time period. Everyone's talking about the BRICS, the Brazil, Russia, India, China, and South Africa taking over the world. And you can see over that 10-year time period, emerging markets are up 380%, whereas you're up 67% in the S&P 500. So significant outperformance for emerging markets when the dollar is going down in value. The following 10 years, from 2010 to 2020, when the dollar was going up in value, you can see that the S&P 500 was up 263%. Emerging markets, you only made a 33% rate of return on your investment. Now we're starting to actually see that trend shift, and we expect emerging markets and international securities to outperform the US stock market over the next several years as the US dollar goes down in value. And if you don't have international and especially emerging markets in your portfolio, this is definitely a time that you want to add that position to your portfolio and get away from US stock investments and diversify your portfolio more into international securities.